Good morning, everybody. 9:38 a.m. Pacific Standard Time. Today is 10/27, 2019. Special report on the S&P 500, which we have rallied up to the highs. But here's the most disturbing thing about the movement, and I'll tell you exactly what it is. The volume is the lightest volume that we have had to the upside. And what could end up happening now, I'm talking about moving forward. I'm not talking about tomorrow, but I am talking about moving forward, and it can come very soon. We're still in the earnings season. The algorithmic high frequency trading models have been sending these things higher. Spread for the S&P 500 stocks that is close to a multi-year high. The rise of passive investing and create liquidity concerns because the buying and the selling disciplines are determined slowly by inflows and outflows from mutual funds and various other market participants and whatnot, which is determined, just so you know. And asset owner level pension funds exposure to private equity has risen demonstrably amid a reach for returns. But any disturbance to private markets, IPO friction, funding stocks via credit or rates, could force pensions to raise cash for distribution by selling more liquid parts of their portfolio. October 31 will be another date where liquidity concerns arise, as it's mandated to cut off for mutual funds to realize capital gains, VIS and VIS, the Tax Return Act of 1986, and December 31 may cause trouble as it's end of the fiscal year of most mutual fund players. So we can understand that. As a major equity benchmarks have crossed to all-time highs, enthusiasm for ongoing bull market appears to be very mild based on trading volume. Average daily volume on the S&P 500 index stocks over the previous 90 days have fallen toward a 10-year low, declining to 7% of the total market capitalization during the 3 months ended October 19th. We're pointing out that reflecting declining liquidity in the S&P 500 stocks, including data from our model IR that showed the average number of shares per trade has fallen from 248 in 2015 to 133 today. A great illustration of the risk here is what happened in the fourth quarter of 2018 could happen again. And that's when we had that 20% correction, as everyone remembers last year. The S&P 500 index last year exacerbated by a lack of willing buyers. Even as stock prices fell to attractive valuations, then they weren't buying. So the whole thing about what's going to happen, and we'll see on October 31, is that markets are in an overbought area. Lack of volume buying is a major concern. And then there are other factors about the Federal Reserve. Are they going to raise rates on October 30? Lower rates on October 31? That's another big issue. We have another big week of earnings coming out this week, which is going to be the bulk of the earnings season. Stocks have advanced on very light volume. The thing that you need to know was that in the calendar year of 2019, they kept bringing estimates down quarter after quarter. They would lower the estimates, and the estimates got so low during this particular reporting session in the earnings that we're going through right now, is they were able to come in and they could beat those lower revisions. But that's not what you want to see. A healthy stock market, you don't keep taking down quarterly earnings estimates for a year and then come in and you finally get a pop and a move.
Market
Get
data
through this
connection
week,
re-established.
what will end up happening is that the earnings season is going to be falling off. Stocks are going to have to figure out how are they going to continue to go higher. Where are the buyers during this? This is the biggest worry that you need to have. Lack of volume and commitment in a bull run. And the month of October has been very, very, very rocky. There's been a lot of gimmicks that they've come back in here again, and they're trying to get out up here, and there's going to be a problem. And there's going to be a problem. And I can only tell you right now, cutting interest rates another quarter point is already baked in the cake right as we speak. We're up here at all-time highs on very low volume. I can't emphasize it enough. And there will be a good size and a big pullback coming. And we've always called when we get into these crucial areas right now. And it's something to be extremely worried about for regular Joe Blow. And I'm just letting you know right now, it's not all of what it appears to be. Read the write-up. You'll understand it. That's the biggest concern. Volume. Volume on the buy side, volume has been declining, and it has. Algorithmic high frequency trading technologies have ran this S&P right up here toward the highs of an overbought market, and we will have that reversal. It could come any day. But I would imagine that tomorrow will probably gap up because they went ahead and they killed that terrorist ISIS guy. But it doesn't matter. What does matter is that they got their counter rally on very, very low volume. October will be over the 31st. FOMC meeting, lots of liquidity issues, and there are. And when these people start to exit with profit taking, that means that the downside volume would be higher on profit taking. The upside volume in the S&P has been declining. In the average S&P 500 stocks, once again, take it to heart.